Hello, everyone. Welcome. Good morning, good afternoon, good evening, wherever you are in the world. It gives me great pleasure to welcome you in a second webinar of ours in the prelude to the Sustainable Foods London Conference, which is being held on the 6th and 7th of November at the Queen Elizabeth II Conference Centre. Our topic today is something that's very dear and interesting, particularly to my focus within sustainable foods, and that's the investment climate within food and drink. So it gives me great pleasure to introduce Sofia Condes, Tomer Strikovsky, Sofia from Fair Initiative and Tomer from ETF Partners, who are going to be diving into some key questions focused on where are the investment opportunities within food and drink and investing for the future. To all the audience that are there, welcome. Please do submit your questions. We're here for the next 45 minutes or so. I'm going to pepper the conversation with questions, so please do get involved. There's a function on the right side of your screens where you Q&A box. So as many questions as we can will be fantastic. So welcome, Sophia. Welcome, Tomer. I would like to start off, please, if you give a brief introduction. Sophia, you're on mute, but why don't you kick us off? Give us a quick intro about your work at FAIR and Head of Invest Outreach.
Yes, thank you, Jawad. Pleasure to be here today, and thank you to everyone who's joining us. So I head the investor outreach function at the FAIR Initiative. For those of you who are not familiar with FAIR, we are a nonprofit with the mission to help use the investor influence to drive a more sustainable and equitable food system. And as part of that mission, we have an investor network that is currently composed of over 380 investor members, both asset owners and asset managers from all over the world. And we focus on providing that network with the right tools, data, and research to be able to navigate the food and agriculture sector and its risks when it comes to ESG and also its opportunities. And we also facilitate collaborative engagements between investors and some of the largest companies in the food and ag sector with a specific focus on the protein value chain. Thank you.
Thanks, Sophia. Over to you, Tomer.
Thank you, Jawad, and thank you for having me. Tomer, I'm a partner at the Environmental Technologies Fund. We are a London-based climate VC. We invest in early-stage companies in Europe in the climate space. So that, of course, includes food and ag. We manage about $500 million. And in terms of specifically food and ag, we can invest in anything across the value chain, from technologies around production, around supply, distribution, and the like, as long as it has a measurable impact. Within the fund, also the partner involved with some of our food investments to date, notably Modern Milkman, where I'm a director. Modern Milkman provides delivery services for local groceries in returnable packaging. So zero plastic is the concept there. And happy to share today what we see both in terms of the market and new companies, as well as what we experience in our own portfolio.
Thank you, Tomer. I mean, I would like to kick off by looking at the actual climate we're in. So we had the COVID years where a lot of money was flowing into not just food and agriculture and drink, but into every possible industry. And cheap financing was available. Valuations were overinflated, but that's crashed down over the past few years as we've seen interest rates dramatically rise across the world and cheap debt no longer as freely available. So what's happened in the past few years, particularly within food and drink, Tomer, in terms of why is investor appetite shifting? We've seen obviously huge flows back in the day going to the major companies within alternative proteins, etc. But the environment has changed. What's happened?
So I think, Jawad, within your question, you already answered it to some extent with your point about the interest rate rise. Food and ag, like most industries, is kind of aligned to market. With the rise of interest rates, the price or the cost of capital has changed, and it is no longer cheap to raise money. At the same time, to your point about the cost of living, interest rates go up, prices went up with inflation, and that meant that available spend from customer narrowed down. Now, I started by saying that, like the rest of the market, it is not specifically for food and ag. Food and ag benefited a lot from the COVID period because kind of food and the scarcity of it and the need to have it delivered to your home was top of mind. But at the same time, we see it across industries where there's just less capital available. If you look at it from an investor lens, then the ability to return capital to have a good ROI is the bar is much higher now, because in the past, when interest rates were zero, that meant that when you leave the money in the bank, you don't get anything. So if a venture case can even do 10% yield, it's already 10 times better. So now with interest rates being globally at around, in the West at least, at around 5%, that means that the bar is much higher. At the same time, we've also, as a consequence of that, we also have seen that the previous multiple expansion in the market, which was caused by capital chasing companies, has stopped. So things like revenue multiples or EBITDA multiples have stopped going up and actually shrunk, which meant that valuations reduced by a lot. So all of these factors together and less growth with less money to spend kind of brought us to, I wouldn't call it crash, but a new reality. And I think us investors and companies are adjusting their way of operating based on this new reality.
Do you think that has, in terms of food and drink specifically, Tomer, I mean, you hear Beyond Meat, etc., they're offering, particularly in the alternative protein space. Do you think there's also the interest from the consumer potentially within these alternative programs and meats, etc., are dwindling, and that's also reflected in the investment flows into food and drink?
I think each category has its own story. Definitely, when the likes of Beyond Meat came to market and Oatly, there was a lot of bullishness, and it also was factored in to the pricing of these assets. People felt very bullish about, especially investors, about the future of these products. What we came to realize over time is that they're not necessarily price competitive, they're not necessarily healthier, given the high amount of processing that is involved with these products. And actually, there was sort of a realization that things like, for example, plant-based meat, some of them would be great, some of them may be less so. Very much aligned with the Gartner hype cycle. You have this big hype in the beginning, then kind of the valley of realization, or the right term that they coined, and then sort of a plateau. Having said that, I think climate is still on the agenda. This product sector has a place in the world. Plant-based meat, it's not for everyone, but there's certainly a market for it, and you can see that Beyond Meat still has a nice market share and not such a bad multiple. It's being traded at 4 times revenue. Impossible is growing, but more than that, we see a lot of innovation in the lab-grown space, whether it's dairy products, fish, meat. So that would be maybe the kind of next frontier when it comes to this sector.
I'll touch upon next frontiers, you nicely said, in a few minutes or so. I'd like, Sophia, for you to come in terms of where are we now in terms of food and drink investment? How is the investment climate? Investors, how are they feeling, and how are you in terms of the outreach program, dealing with investors' concerns or advice, etc.?
Yeah, thank you. I mean, I think there's been a lot that has been covered by Tom, but I think maybe more from the institutional investor perspective, I mean, we're still seeing that institutional investors with mandate in this sector are still actively investing in the sector. However, I mean, because of the macroeconomic reasons mentioned beforehand, their return expectations have changed and have maybe increased because of the higher interest rates. We've also seen that institutional investors have gained more, their interest in direct investments has risen, especially across categories of assets such as farmland and infrastructure. That continues to gain weight, and we're seeing some of the partnerships with owners, operators grown more widely accepted. And I think beyond that, I mean, as Tom mentioned, each category has its own story. For example, we have seen that the livestock sector has been heavily impacted by rising food prices, which has, I mean, seen decreasing profits for some of the protein categories. And that, coupled by rising awareness of ESG risks in this sector, means that some investors have retracted and had to lower their exposure to the sector. And I think that beyond some of the more short-term macroeconomic volatility, I think investors have it clear that climate goals and emissions reduction goals are not going anywhere. And that given the contribution of this food and ag sector to emissions, really they need to have a very strong climate lens in any exposure that they have in the sector. So I think that is here to stay. And I think some of the investors, especially institutional investors with a mid to long-term horizon, they're still bullish in some of the more kind of climate sensitive, kind of climate positive business models that are out there. And I think that we are also seeing that there's still potential for value creation. So I think what we've seen a lot, and maybe that has been from an institutional investor perspective, a big change over the last year, has been that in terms of ESG priorities, biodiversity has risen drastically in the agenda. So now I think when you're looking at a company from an ESG perspective, you're not just going to look at climate in a silo. It's going to be more kind of what does this business model mean for climate and nature more broadly? So it is some of the companies that have kind of embedded that into their impact thesis or into their strategy that will be much more attractive for investors. And I think that the Montreal Protocol that just came to life at the end of last year is kind of just now starting to be implemented and embedded in some of the strategy for institutional investors. And with the task force for nature-related financial disclosures that is just coming up next month, I think that will become more of a reality. So I think that businesses that were really only focused on kind of, I'm doing what's right for climate, now will have to do much more to become interesting for investors. And that's kind of the lens that investors are taking. And there's really a priority for not looking at climate in isolation when looking at the sector.
I mean, that leads nicely to the next question. Please do, Sophia, take on in terms of which sectors and industries are attracting the big money. I know you mentioned, obviously, the climate story now really has to be embedded and promoted alongside, obviously, the food agricultural benefits to society. But what sectors are attracting money, with, where investors predominantly feeling quite bullish in particular? You've mentioned briefly just a few then, but it'd be great if you could elaborate.
Yeah, I mean, I think that, it's again, all of that kind of more of a holistic nature lens means that some sectors such as water infrastructure are now attracting a lot of interest from investors. Some of the financing of more kind of industrial assets as well. And I think some of the thesis around we want to look at some of the solutions for the biodiversity problem means that sectors in related spaces such as biomass and kind of circularity solutions for the sector are really attractive. Just to give an example, we launched a collaborative engagement focus on the biodiversity risks linked to manure in the livestock sector, which we thought maybe manure initially when we were thinking about it is not the most interesting topic for investors, but actually there was tons of interest in learning more about it because manure it's a waste product that is highly concentrated in a specific area, so it's a pollutant, it's a biodiversity risk. But if that manure can be turned into a circular solution, it actually can be a huge opportunity. And actually that's been our collaborative engagement with the biggest investor sign-on. So again, all the business models around kind of biomass circularity solutions are also really interesting. And again, linking it to the biodiversity aspect, business models around regenerative practices and some of the associated funding, and that includes, for example, some of the opportunities around carbon markets, with all their strengths and limitations, but definitely a lot of money flowing in that direction.
Tomer, please do jump in terms of your experience about ETF. What areas are you quite focused on? You mentioned the modern milkman.
So firstly, everything Sophia mentioned is spot on. These areas are now getting a lot of attention. I think with the rise of climate tech as I don't know if to call it an asset class, but certainly a defined category within VC, you have more and more funds that are not shying away from deep tech and hardware and are willing to go into those higher capex models. On maybe more the software or asset light models, I would just add that everything that relates to measurement is definitely front and center. So it can be plainly carbon accounting for specifically for food use cases. So you have, I think, in the last couple of years, more than 10 players that came up, especially in Europe, with kind of a verticalized approach around carbon accounting for food and beverages. So that's definitely one. Surprisingly enough, I see that the D2C models around food are actually not dead as one might think. We are not necessarily too active in this area, but you have the famous water company Liquid Death continuing with quite significant growth even in 2022 and 2023. Those who are not familiar, this is canned water with some cool branding. But yeah, it's happening. We've came across a company that does something similar with wine. So these categories do certainly grow. The other one to comment on, you've asked about the modern milkman. So not necessarily lots of happening in the VC or the early stage level, but what we do notice is that after the whole quick groceries saga, where lots of companies were built, raised lots of money, and many of them faltered, what we are seeing is sort of a realization. So after the hype curve, which we've mentioned earlier on with different context, now what we see with groceries is that more the incumbents like DoorDash, like Instacart, Uber Eats, Deliveroo, they sort of see this new world where people are ordering groceries to their home. It's not necessarily those big Ocado, Walmart baskets, weekly or monthly, whatever. It's not a 10 minutes order either. It's something in between. And we see definitely a category there. And we think this is something that is here to stay. But kind of back to the point about what's happening now in terms of innovation, it's measurement across the supply chain, which really ties into what Sophia said about regulation, and that's the driver for it. And for me also, the alternative protein space seems quite resilient.
I would like to just remind everyone in the audience, we do have questions, so please do submit them. I would like to move on now in terms of that outlook for those, starting out within their food and drink journey, whether they're a technology, whatever that is, and the outlook for fundraising. I mean, Tommy, how's deal flow currently compared to a few years ago? I mean, are you seeing a bit more of the pipeline, contracting, or are we still seeing a good, healthy, steady flow? And secondly, in terms of what is the outlook? So how any tips you'd recommend for those companies that are potentially fundraising for fresh capital? I also question to you, Sophie, as well.
Sure. So I haven't done the work on separating our pipeline based on categories in the first 2 halves of the year, but I would say that deal flow is quite resilient as a whole. In food, again, without kind of connecting it to empiric data, I would intuitively say that it's probably slightly less. I think anything that was about innovative or kind of new approaches to deliver food or meal kit businesses of different shapes and forms, meal kit for babies, meal kit for kids that are between 5 and 7, etc. Like, it became really granular at one point, the meal kit business is an example. So I think these type of models are out of the picture, and I would say that that in that sense there's probably less activity. Kind of a general comment, but definitely applies to food and beverages as well. We are in a reality where, as discussed in the beginning of our conversation, there is not unlimited. There is not a feeling of unlimited capital going around. So the bar is very high. Depends on which stage the company is in terms of the capital stack, seed or A. Of course, on the seed side of things are still a bit more active. We are more A and B investors, and I would say that on our part of the value chain, the bar is quite high. Investors want to see commerciability and growth, while at the same time a kind of responsible spend and a relatively low cash burn. That is sometimes impossible. So therefore, I think a lot of investors would take lower growth for better cash management. So lower growth meaning 30 to 60% versus hundreds of percentages.
Is that a new development there?
I would say something that's been going on in the last 18 months. While before that it was growth at all cost, literally at all cost. So that has dramatically changed. The other thing, if you are direct to consumer or similar, there's a lot of scrutiny on customer acquisition cost. I think this is an area that also encountered a big shift in the last decade. It was much easier to grow channels via social media, by going viral. Every time there was a new platform like TikTok, prior to that Instagram and Snap, it was much easier to ramp up. It's a different world now. It's harder, it's more expensive. So I think investors are pretty weary about assumptions of we'll just have 5,000 customers this year and 500,000 the next. So there's just much more responsibility, I would say, in the market. It takes more time to close rounds. So to your question about recommendations, I would bear that in mind, that closing time for deals are longer, and one needs to take that in mind when thinking of runway and the like.
Same question to you, Sophia, in terms of tips for those that are fundraising. It'd be good to hear your feedback, how you're liaising.
Yeah, I mean, I guess that's more on Tom's area of expertise, but I think from a high level, what we're seeing is that, again, I mean, when we hear like capital is no longer available, I mean, capital is still there, but it's just far more selective. And I think it also depends on the regions where the business models are based. I think that we work with a lot of European investors, but we also work with a lot of global investors that are kind of looking at opportunities more globally. And when you look, for example, at the alternative protein story, the story can be very different depending on the regions. I think that in some markets, like if you're sitting in London, maybe you see that some of the specific product categories have become very saturated. But if you're a company that is, I don't know, sitting in Latin America and you're launching the first really good dairy alternative, you're still going to have a very strong business case. So I think the kind of very maybe obvious advice is like, how are you actually differentiating yourself? And are you actually providing, if you're sitting in a region where that market is already saturated, is your solution more of a solution that kind of can be used by the broader market? So for example, some of the ingredient companies are still very interesting because they can kind of be there as kind of building blocks for many different types of models. But if you are kind of a product closer to the consumer, I think there's still a very, there are markets where consumers are still hungry for that. I mean, I know that, again, sitting in London sometimes it's difficult to see that, but let's kind of get out of our bubble and realize that probably the expectation that Beyond Meat should be available in every single country tomorrow was, I mean, kind of set up for failure. Instead, we're going to have some countries have their own Beyond Meat, and that's great, right? And we need to still make sure that investors are supporting those local Beyond Meat companies, and then Beyond Meat will be available in some of the markets where it already is, and kind of continuously capture more consumers. So I think those are some of the basic questions that companies should ask themselves, and should say, like, I mean, is my business model kind of additive, and then am I bringing a new solution to a region that doesn't have that solution? And I think, yeah, institutional investors again are still going to put much more scrutiny on the ESG thesis. So I think before, again, like just saying, okay, I'm an alternative protein company, that's no longer enough. I think like we've done a lot of work on developing frameworks to actually assess some of these companies from an ESG perspective. So another big recommendation, I think, for companies that are fundraising is make sure your ESG framework is kind of as solid as possible from the beginning, so that when you're kind of going through those funding rounds, some of the investors that have more of that ESG lens will be able to kind of do their due diligence and be comfortable with that, and then you won't have to then figure it out later in the stage.
Yeah, I couldn't agree more with you there, Sophia. And also, we forget that, we're sitting in London. I believe all of us are, the three of us. But the challenges of food sustainability are not uniform to each country. Your issues in the Middle East, for example, are very different to what our issues are in Europe and in the West. So that was a very interesting point from yourself. I'd like to now move on in terms of food sustainability on a broader level and the food supply chain. The theme of our show, Sustainable Foods, is really bringing together all the key players within the food and drink industry to discuss the sustainability challenges and opportunities facing it. Obviously, food production is a key space in terms of emissions and sustainability criteria that it doesn't meet and all of that. But I'd like to know from your perspective, what trends are you currently witnessing that's going to help us meet global growing food demands, whilst also managing that difficulty of trying to maintain sustainable production? Whoever would like to take that on, please do.
I mean, I'm happy to start. This is something that we have a lot of focus on, following some of the ESG trends in the food and ag sector. So I guess climate has been top of the agenda, will probably be and continue. And I think especially in less developed markets, it's kind of just starting to become more of a priority. But I think some of the rising sustainability priorities are linked to some of the opportunities I mentioned. I mean, biodiversity is a big one, and regenerative agriculture is like kind of been put out there as a solution. I think there's still a lot of questions around whether we can actually kind of scale some of those models and for it to become a solution. But I always say, like, it shouldn't be a panacea. Like there's a lot of complementary issues that need to happen in kind of simultaneously. I think water issues are becoming much more prominent. I think water risks, and especially we know that some regions have been more kind of more prone to droughts for a long time. But I think now seeing some of the droughts really shape the crops of the last year in Europe. I mean, we had a very dry winter in some of the in some of the countries where it was unusual. So water risks are rising up in the agenda. And also social issues. I think some of the consumers are now kind of realizing that is not the environment is a key priority, but I think knowing that your food is also kind of the whole supply chain involved in food production all the way to consumer is not exposed to social risks is important. I think that this we're seeing quite a bit in the US, where there's been quite a few scandals, and I think with some of the tensions around migrant labor and the scandals resulting from that, there's more conscious around that. And then I would also say that we tend to not talk about health when it comes to sustainability, but I always say like there's no sustainability without health, and there's no health without sustainability. And I think that is still an issue that, especially for the high income consumer, nutrition, how do we figure that out? And how do we make sure that with an obesity really epidemic, we are not putting products out there that are kind of continuously supporting more of that kind of burden of disease. So I think a lot of the products that are more looking at less processing, better quality is really important. And we're seeing kind of more consumer awareness, but also a lot of misinformation, which means that sometimes some of the models that are put out there can use that as kind of greenwashing or impact washing. So again, that's why I think it's really important, as Tom has mentioned, some of the models that then relate to proper measurements and being able to kind of give the consumer the information that it needs and the investor the information that it needs will always be valid. But yeah, just some of the trends around ESG there.
Can I just elaborate on, you mentioned health and nutrition, which I think often gets neglected. We've got obviously UPF is a massive conversation currently that's really taking off in terms of what we're actually putting in our body. How do we manage, health and nutritional concerns in the current climate? Purses are squeezed. People are obviously, there's a lack of information in many of these products. The conversations only really started to get going on UPF fairly recently. So how do we manage health and nutrition with cost?
Yeah, I mean, it's a very big question, right? But I would say that sometimes we tend to kind of overcomplicate some of the ingredients in food, and some of the most nutritious ingredients, such as legumes, are not necessarily the most expensive. So I think that some of the models that are kind of making, I mean, even in places like the UK that are making kind of foods made out of legumes more attractive, easier to access for the consumer, are meeting that demand of the health conscious consumer. And also some of those models are like both nutritionally positive and environmentally positive. So I always think like for me, like plant-based milk made out of pea is, or any product made out of peas, I'm like, well, that kind of almost ticks all the boxes. But it is a challenging one. I know there's been like, what we're seeing, at least in some of the large listed companies, is that their kind of new products are actually simpler products with less ingredients. And that's kind of what the health conscious consumer is looking for. Instead of looking at a product in a list of 25 ingredients, out of which 15 you can't spell, having a product that has 4 or 5, right? And I think that's kind of where the industry, at least internally, some of these big companies, that's where their thinking is headed.
Thank you for that. I mean, I find the whole nutrition and sustainability conversation really fascinating, but I have diverted slightly from the conversation in terms of investment. So to bring it back on track, Tom, in terms of financing now in the current climate and the challenges we're facing, what suggestions do you have for entrepreneurs in terms of food and agriculture and things to get their product in front of potential investors?
You mean in addition to the previous points?
Yes.
Look, I think in terms of raising capital from investors, if that's what you mean by getting their product in front of investors, then it's really about everything I said earlier. So demonstrating businesses that have route to profitability, good cost control, product market fit, and growth potential. So I understand that for some companies they are not there yet because they might be too early and they're still looking for the product market fit. But that's kind of a different conversation on seed stage, which I'm not best positioned to advise. What I can say at any stage is that, as I said earlier, the bar is very high. So in the same way that each founder is looking for excellency from their team, they must be excellent in fundraising. It's another function in the business now more than ever. And I think those founders that have kind of grasped how the market have changed quickly are performing better at that. And again, in the same way that they want their sales team to be everywhere and they want their developers to build the best products, on the fundraising side, you want to be as professional as you can, speak with a large quantity of investors, not kind of say, okay, I'm going to speak with 5 or 10 and hopefully one would convert. You need to go for a bigger pool, run a professional survey, professional process as much as you can, DRM, follow up on meetings, data room, answers to investors' questions, kind of do the homework, do the research.
Full-time job.
Yeah, in some ways it is a full-time job to raise capital. So it's hard to balance, and I don't envy this position, and I'm very empathetic. But I think this is now the challenge for a lot of companies. So that's now the kind of main challenge and the way to excel and to stand out.
And also you can filter out. Having such a high bar on a number of metrics is frankly what should be the case. I would like to end on just a broader question for both of you in terms of what does the future of food look like to either of you. So, Tommy, why don't you start? I mean, where is the industry headed? What do you think of when someone says the future of food? What does it look like?
So we very much look at it as how do we ensure food security as well as sustainable food production. I think to everything Sophia said about health, regulations need to play a big role in that. And ideally, we have a future where there is more real food available, so not things with plenty of nutritional value, and therefore, hopefully, we'll also have less food waste. So this is a world where there's more real food available to everyone at price parity, less food waste, and again, in every category there would be innovations that would help that to bring real food to market, to reduce food waste during the production supply chain and at home, and then new methods of producing food, whether it's lab grown, whether it's food made of air, whether it's wheat grown in a lab. So all of these things have already been piloted and hopefully would be commercialized in the coming years. Food that is produced predominantly by using recycled water, recycled resources, like manure and compost, as well as renewable energy. So again, this is all stuff that are already happening, and we need to see that at scale. And then also new types of food that would be small, easy to produce, and full of nutritional value. So I think in that sense, from a technology perspective, there's lots to be positive about. And this is really kind of the future that we hope for and are working for.
Same question to you, Sophie. What does the future of food look like to you?
Well, I like Tom's future, so I'm almost tempted to just take that one. But yeah, I mean, I think we're aligned with that. I think the future has to be more sustainable. It also has to be healthier, because I think in today's world, the main reason of poor health in middle and high income markets is our terrible diets, right? So I also think that technology will play a role, but the role of technology will be different in different countries. I think some of the high-tech solutions that we're seeing in the highest income markets are not necessarily adapted to poor markets, but there are other solutions like a proper cold value chain that are still not yet. And that value chain that allows refrigeration should be using solar energy. So something that maybe sounds simple, but is not yet a reality in many markets. I think that is part of that future food system that we would love to see. And I also think it involves a diversity of foods. One of the biggest problems with our food system is that we're eating very few crops very intensively. So sometimes maybe the most exciting thing would be for us just to add new foods into our diets that are better. Some of the more interesting cereals and legumes that we are not yet eating. And also just say, I mean, I think there is no silver lining to achieving that future, but rather a complementary set of interventions and efforts to get there. So anyone that tells you I have the one solution for the future of food is probably not grasping the complexity of the challenges. So I think some of the technologies will be part of the solution, consumer change, regulatory change, better investment practices, all of those complementary solutions. And I think we're getting there, but this is a sector that is very complex, takes a lot of efforts and vested interest to change. So if people thought that like one solution was just going to completely switch us over in 1 or 2 years, I think they were very naive, but small progresses are still progress. And I think we're seeing some consumer preferences change, and that's my cause for optimism.
Well said. There's plenty to be optimistic about. There's a lot on the pipeline and many different areas of growth and things we can all be excited about when looking at food sustainability. I'd like to thank you both for taking the time out of your busy days to join us for the webinar in the run-up to Sustainable Foods London. As I said, is on the 6th and 7th of November. Both Tomer and Sophia will be there. So I hope we can see you in person, everyone who's watching, and ask some more insightful conversations. So thank you again, Sophia. Thank you, Tomer, and we'll be seeing you very soon. Thank you and all the best.
Thank you very much.
Thank you for having us.
Thank you.